Question 1. Benefit calculations and payment structures. How is the benefit amount typically calculated in a Maryland disability insurance policy? A. Based solely on the insured's pre-disability income. B. A fixed amount determined by the insurance company independent of the insured's income. C. Based on a percentage of the insured's pre-disability income, subject to a maximum benefit limit. D. Based on the insured's age and occupation, with no relation to pre-disability income. Answer: C. Based on a percentage of the insured's pre-disability income, subject to a maximum benefit limit. Explanation: in Maryland, as in most states, disability insurance benefits are typically calculated as a percentage of the insured's pre-disability income with a cap on the maximum benefit amount. This ensures that the insured receives a level of income replacement, but not necessarily their entire income. The percentage often ranges from 50% to 70%. Depending on the policy, there are often maximum benefit limits in place to ensure that the benefit is reasonable. This system provides sufficient compensation while controlling the insurance company's exposure to high claims. While their options are incorrect, while income is a primary factor, solely basing the benefit on pre-disability income without considering the benefit cap is not typical. B. A fixed amount regardless of income would be rare because it does not adequately reflect the financial impact of a disability. D. Age and occupation might influence premiums or the likelihood of disability, but are not typically the basis for calculating the benefit amount. Question 2. Risk management and underwriting. Which of the following factors is most likely to increase the premium for a disability insurance policy in Maryland? A. Being employed in the sedentary office role. B. A history of smoking or other risky health behaviors. C. A high-paying job with a stable income. D. Having a short-term disability policy already in place. Answer: B. A history of smoking or other risky health behaviors. Explanation: disability insurance premiums are typically higher for individuals who engage in risky health behaviors such as smoking, excessive drinking, or a history of chronic diseases. This is because these behaviors increase the risk of illness or injury, which could lead to a claim. Insurance companies assess risk during the underwriting process and charge higher premiums for individuals who pose a higher likelihood of needing benefits. While the options are incorrect, a sedentary office role generally doesn't significantly impact premiums unless associated with specific health risks. C. While higher income might increase the amount of coverage needed, it does not directly affect the premium unless the job is particularly hazardous. D. Having a short-term disability policy may influence coverage options, but typically doesn't affect premiums for long-term disability policies unless overlapping coverage issues arise. Question 3. Scenario question. Disability insurance claims handling and dispute resolution. Mr. Thompson, a Maryland resident, has been receiving disability benefits for several months due to a severe back injury. His doctor indicates that he is unable to return to work but recommends a less physically demanding job. The insurance company has requested that Mr. Thompson undergo an independent medical examination to assess his ongoing disability. Mr. Thompson is concerned about the potential for his benefits to be reduced. What should Mr. Thompson do in this situation? A. Agree to the IME as it is a standard part of the claims process and refuse to take any additional action. B. Contact a lawyer to evaluate his situation and ensure that his benefits are not unfairly reduced. C. Cease communication with the insurance company until he receives further instructions. D. Return to his previous job as the doctor's recommendation is just an opinion and continue receiving full benefits. Answer: B. Contact a lawyer to evaluate his situation and ensure that his benefits are not unfairly reduced. Explanation: independent medical examinations are commonly requested by insurance companies to assess the ongoing need for benefits, especially in long-term disability claims. However, Mr. Thompson should be aware that the results of an IME can affect his eligibility for continued benefits, and there may be concerns about whether the insurance company will fairly assess his condition. Contacting a lawyer can help him understand his rights, ensure the insurance company is following the correct procedures, and protect him from unfair benefit reductions. While our options are incorrect, while agreeing to the IME is necessary, Mr. Thompson should also take steps to ensure that his rights are protected, such as consulting with a lawyer. Ceasing communication with the insurance company may cause delays in the claims process or result in adverse consequences, such as benefit termination. D. Returning to his previous job may not be possible due to the nature of his disability. Continuing to receive benefits while attempting to return to work is a separate issue from the IME process. Question 4. Maryland disability insurance laws and regulations. Which of the following is a key requirement for employers in Maryland regarding disability insurance coverage for their employees? A. Employers must provide long-term disability insurance to all employees. B. Employers must offer disability insurance coverage to employees, but participation is voluntary. C. Employers are required to offer short-term disability insurance, but long-term coverage is optional. D. Employers are required to offer disability insurance, but only to full-time employees. Answer: D. Employers are required to offer disability insurance, but only to full-time employees. Explanation: in Maryland, the law requires employers to offer disability insurance coverage to their employees, but only to those working full-time. Employers have some flexibility in offering this coverage, but the mandate generally applies to employees working full-time. The exact rules may vary by industry, but this is its standard requirement under Maryland's disability insurance regulations. While the options are incorrect, A. Employers are not required to offer long-term disability insurance to all employees. B. Disability insurance is not voluntary for full-time employees as it is a legal requirement. C. Short-term disability insurance is required, but long-term disability insurance is not mandatory. Question 5. Disability insurance contracts and riders. Which of the following riders would most likely be included in a disability insurance policy to help protect the insured from inflation during a long-term disability? A. Residual disability rider. B. Cost of living adjustment COLA rider. C. Partial disability rider. D. Reinstatement rider. Answer: B. Cost of living adjustment COLA rider. Explanation: the cost of living adjustment COLA rider is commonly included in disability insurance policies to protect the insured against inflation, ensuring that the benefit amount increases in line with the cost of living. This is especially important for long-term disabilities as it helps maintain the purchasing power of benefits over time. The COLA rider adjusts the benefit periodically based on inflation rates to keep pace with rising costs. While our options are incorrect, A. The residual disability rider helps replace part of the income if the insured is partially disabled, but it does not address inflation. C. The partial disability rider provides benefits for partial disabilities, but does not protect against inflation. D. The reinstatement rider allows the insured to reinstate a lapsed policy, but it does not address inflation or benefit increases. Question 6. Benefit calculations and payment structures. What is the most common income replacement ratio used for disability benefits in Maryland, typically covering a portion of an insured's pre-disability income? A. 40% to 50%. B. 60% to 70%. C. 75% to 80%. D. 90% to 100%. Answer: B. 60% to 70%. Explanation: in Maryland, as well as in many other states, the most common income replacement ratio for disability insurance benefits ranges from 60% to 70% of the insured's pre-disability income. This percentage ensures a reasonable level of financial support while encouraging a return to work if the person is able. The exact percentage can vary depending on the insurance policy and specific coverage details. While our options are incorrect, A. An income replacement ratio 40% to 50% is too low to provide a sufficient level of income replacement for most insured individuals. C. An income replacement ratio of 75% to 80% would be unusually high and could raise premium costs unnecessarily. D. A replacement ratio of 90% to 100% would typically not be feasible, as it could encourage people to remain out of work unnecessarily. Question 7. Claim process and procedures. Which of the following is the first step in filing a disability claim in Maryland? A. Submitting medical records to the insurance company. B. Notifying the employer about the disability. C. Receiving approval from the insurance adjuster. D. Scheduling an independent medical examination. Answer: B. Notifying the employer about the disability. Explanation: the first step in filing a disability claim is to notify the employer about the disability. This allows the employer to begin the process of reporting the disability to the insurance company and provides documentation for the claim. In Maryland, employers play a key role in initiating the disability claim process, and timely notification is crucial to ensure that benefits are processed efficiently. While our options are incorrect, A. Submitting medical records is an important step, but it typically occurs after notifying the employer and beginning the claims process. C. Approval from the insurance adjuster happens after the claim has been filed and reviewed. D. The IME is a part of the claim review process but does not occur until after the claim has been initiated. Question 8. Disability insurance for specific populations. Which of the following groups is most likely to face challenges in obtaining disability insurance coverage in Maryland due to the nature of their employment? A. Self-employed individuals. B. Part-time employees working in retail. C. Corporate employees with steady desk jobs. D. Individuals working in healthcare professions. Answer A. Self-employed individuals. Explanation. Self-employed individuals often face challenges when applying for disability insurance because they do not have a consistent employer to provide group coverage. Additionally, insurance companies may view self-employed individuals as a higher risk due to the fluctuating nature of their income. As a result, premiums may be higher or coverage options may be more limited. While other options are incorrect, B. Part-time employees may face limited coverage options, but they are typically more likely to have access to individual policies than self-employed individuals. C. Corporate employees with steady desk jobs usually have access to group disability insurance, making coverage more straightforward. D. Individuals working in healthcare professions may face higher premiums due to the physical demands of their work, but they generally have access to coverage options. Question 9. Taxation and Social Security disability benefits. How do Maryland disability benefits interact with Social Security disability insurance (SSDI) benefits? A. Maryland disability benefits are not taxed, regardless of whether SSDI is also received. B. Maryland disability benefits are reduced dollar for dollar if the individual is receiving SSDI. C. SSDI benefits are included in the calculation of Maryland disability benefits, which may reduce the amount received. D. There is no interaction between Maryland disability benefits and SSDI benefits. Answer. C. SSDI benefits are included in the calculation of Maryland disability benefits, which may reduce the amount received. Explanation. In Maryland, disability insurance benefits may be reduced if the insured is also receiving Social Security disability insurance (SSDI) benefits. This is because SSDI benefits are considered income and the total amount of income replacement is capped to avoid overcompensating the individual. The interaction between these benefits is a key consideration in disability insurance claims. Where the options are incorrect: A. While Maryland disability benefits may not be taxed, the interaction with SSDI benefits can still affect the amount of the disability benefits received. B. The benefits are not necessarily reduced dollar for dollar, but SSDI payments can reduce the total disability benefit amount. D. There is indeed an interaction between Maryland disability benefits and SSDI, which can impact the overall benefit amount. Question 10. Disability insurance fraud and abuse. Which of the following is a common sign that a disability claim may be fraudulent? A. The claimant has not been employed for at least 6 months prior to the disability. B. The claimant's reported symptoms vary significantly from one medical provider to another. C. The claimant submits medical records but refuses to undergo an independent medical examination. D. The claimant is receiving treatment from a highly specialized medical facility. Answer. B. The claimant's reported symptoms vary significantly from one medical provider to another. Explanation. One common sign of potential disability insurance fraud is when a claimant's reported symptoms or medical history vary significantly between different healthcare providers. This discrepancy raises concerns that the claimant may be falsifying their condition or exaggerating the severity of their disability. Insurance companies often investigate such inconsistencies closely during the claims process. Why other options are incorrect? A. A lack of employment for at least 6 months does not necessarily indicate fraud, and policies allow claims after shorter duration of employment. C. While refusing an independent medical examination, EMEA could raise concerns, it does not in itself indicate fraud. D. Treatment from a highly specialized medical facility is not a sign of fraud and may be necessary for certain disabilities. Question 11. Disability insurance policy exclusions. Which of the following is most likely to be excluded from a typical disability insurance policy in Maryland? A. Injury resulting from a car accident. B. Disability due to a pre-existing condition. C. Disability caused by a sudden illness. D. Injury from an accidental fall at work. Answer. B. Disability due to a pre-existing condition. Explanation. Many disability insurance policies in Maryland and across the U.S. contain exclusions for disabilities caused by pre-existing conditions. A pre-existing condition refers to a medical condition that existed before the start of the policy, and coverage for such conditions may be excluded or limited. Insurers typically do not cover disabilities resulting from such conditions for a set period after the policy begins. Why the options are incorrect. A. Injury resulting from a car accident is typically covered, depending on the policy. C. Disabilities caused by sudden illness are often covered, unless explicitly excluded in the policy. D. Injuries from accidental falls at work are generally covered under most disability policies. Question 12. Short-term versus long-term disability insurance. Which of the following is a primary difference between short-term and long-term disability insurance in Maryland? A. Short-term disability insurance typically covers medical expenses, while long-term disability insurance provides income replacement. B. Long-term disability insurance generally has a higher benefit payout than short-term disability insurance. C. Short-term disability insurance lasts for a longer period than long-term disability insurance. D. Long-term disability insurance is less expensive than short-term disability insurance. Answer: B. Long-term disability insurance generally has a higher benefit payout than short-term disability insurance. Explanation: long-term disability insurance typically offers a higher benefit payout and lasts for a much longer duration than short-term disability insurance. Short-term disability insurance provides income replacement for a shorter period, typically 3 to 6 months, while long-term disability insurance can cover benefits for several years or until retirement age. Why other options are incorrect. A. Both types of insurance can provide income replacement, with medical expenses generally covered under health insurance. C. Short-term disability insurance is shorter in duration compared to long-term disability insurance. D. Long-term disability insurance is generally more expensive due to the higher payout and extended duration. Question 13. Disability insurance eligibility. Which of the following is a requirement for an individual to be eligible for disability insurance benefits under most policies in Maryland? A. The disability must be caused by a workplace accident. B. The disability must prevent the insured from performing any occupation. C. The insured must have been employed for at least 1 year before filing a claim. D. The disability must result from a non-pre-existing medical condition. Answer: C. The insured must have been employed for at least 1 year before filing a claim. Explanation: most disability insurance policies in Maryland require that the insured has been employed for a specific duration, commonly 1 year, before filing a claim. This eligibility requirement ensures that the individual has contributed to the insurance program and maintains consistent employment. Why other options are incorrect. A. Disability insurance covers disabilities regardless of whether they result from workplace accidents. B. Some policies require the disability to prevent the insured from performing their own occupation and not necessarily any occupation. D. Disability resulting from a non-pre-existing condition is not a universal requirement. Question 14. Disability insurance waiting period. What is typically the waiting period, also known as the elimination period, for disability insurance benefits to begin in Maryland? A. 1 to 3 days. B. 7 to 30 days. C. 60 to 90 days. D. 6 months. Answer: B. 7 to 30 days. Explanation: the waiting period or elimination period is the time an individual must wait after becoming disabled before receiving benefits. In Maryland, it typically ranges from 7 to 30 days depending on the policy. This waiting period serves as a deductible of sorts, reducing premiums for the policyholder. While their options are incorrect. A waiting period of 1 to 3 days is too short for most disability insurance policies. C. 60 to 90 days is an unusually long waiting period for most policies. D. A 6-month waiting period is excessively long for most disability insurance plans. Question 15. Social Security Disability Insurance (SSEI) integration. What is the impact of receiving Social Security Disability Insurance (SSDI) on a long-term disability insurance claim in Maryland? A. SSDI will automatically increase the amount of disability benefits the insured receives. B. The insured's disability benefits will remain the same regardless of SSDI. C. The insurer may reduce the disability benefits based on the amount of SSDI the insured receives. D. The insured can only claim SSDI if they have long-term disability insurance. Answer: C. The insurer may reduce the disability benefits based on the amount of SSDI the insured receives. Explanation: in many cases, disability insurance policies in Maryland coordinate with Social Security Disability Insurance (SSDI). If the insured receives SSDI, the long-term disability benefits are often reduced by the amount of SSDI received. This ensures the insured does not receive more in combined benefits than their pre-disability income. Where other options are incorrect, a SSDI typically does not increase the amount of disability benefits the insured receives. B. The insured's benefits are generally adjusted when they start receiving SSDI. D. SSDI eligibility is independent of having long-term disability insurance. Question 16. Group disability insurance plans. Which of the following is a benefit of group disability insurance plans commonly offered by employers in Maryland? A. Group disability insurance plans tend to have low premiums compared to individual policies. B. Group disability insurance plans provide more extensive coverage than individual plans. C. Group disability insurance plans usually allow employees to select their benefit amount. D. Group disability insurance is generally not subject to taxation. Answer: Hey, group disability insurance plans tend to have low premiums compared to individual policies. Explanation: Group disability insurance plans typically offer low premiums due to the risk being spread across a larger pool of insured individuals. Employers negotiate these plans, making them more affordable for employees than individual policies. However, the coverage may not be as tailored or comprehensive as an individual policy. While the options are incorrect, B. Group disability insurance may offer more basic coverage with fewer options compared to individual policies. C. Employees in group plans usually have limited options when choosing their benefit amount. D. Group disability insurance is often subject to taxation depending on how premiums are paid. Question 17. Tax treatment of disability benefits. How are long-term disability benefits treated for tax purposes in Maryland? If the premiums are paid by the employer, A, the benefits are tax-free for the employee. B, the benefits are taxed at the same rate as wages. C, the benefits are partially taxable depending on the employee's income. D, the benefits are fully taxable. Answer: C. The benefits are partially taxable depending on the employee's income. Explanation: If the employer pays for the long-term disability insurance premiums, the benefits are typically taxable to the employee. The amount of taxation depends on whether the employer or the employee paid the premiums. If the employer pays the premiums, the benefits are considered taxable income, and the tax rate depends on the employee's total income. While the options are incorrect, A. Benefits are not tax-free if the employer pays the premiums. B. While benefits are taxable, they are not taxed exactly the same way as wages. D. Benefits are not fully taxable if the employee paid any premiums or through certain deductions. Question 18. Eligibility for short-term disability benefits. Which of the following is most likely a requirement for qualifying for short-term disability benefits in Maryland? A. The disability must be a result of a chronic illness. B. The disability must prevent the individual from performing their job for at least 3 days. C. The claimant must have been employed for at least 5 years before claiming. D. The claimant must have a permanent disability. Answer: B. The disability must prevent the individual from performing their job for at least 3 days. Explanation: For short-term disability benefits in Maryland, an individual must typically be unable to perform their job for at least a few days, often 3 to 7 days. Short-term disability insurance is designed to provide benefits during the initial recovery period before long-term disability benefits may begin. While the options are incorrect, a short-term disability does not require chronic illness. It typically covers temporary disabilities. C. Employment for 5 years is not generally a requirement for short-term disability claims. D. Short-term disability typically covers temporary disabilities, not permanent ones. Question 19. Disability insurance claims denial. What should an individual do if their disability insurance claim is denied in Maryland? A. Accept the denial and move forward with other insurance options. B. File an appeal with the insurance company providing additional medical documentation. C. Do nothing as the claim denial is final. D. Seek legal action immediately without any further steps. Answer: B. File an appeal with the insurance company providing additional medical documentation. Explanation: If a disability insurance claim is denied in Maryland, the individual has the right to appeal the decision. The insurance company will review the appeal, and additional medical documentation can strengthen the case. The appeal process may involve providing new or updated medical information to support the claim. While other options are incorrect, A. The denial is not final, and individuals can often reverse the decision by appealing. C. Doing nothing would not allow the individual to challenge the denial. D. Legal action should only be pursued if the appeal process is unsuccessful. Question 20. Return to work and disability benefits. Which of the following is true regarding returning to work after receiving disability benefits in Maryland? A. Returning to work immediately results in the termination of all disability benefits. B. Returning to work on a limited basis may result in a partial reduction of benefits. C. Disability benefits are automatically resumed if the individual becomes disabled again within a year. D. Individuals must remain out of work for at least a year to continue receiving benefits. Answer: B. Returning to work on a limited basis may result in a partial reduction of benefits. Explanation: in many disability insurance policies in Maryland, returning to work on a limited basis can result in a partial reduction of benefits. Many insurers provide return-to-work programs that allow a gradual transition back to employment where the individual can receive partial disability benefits in addition to their income from working. While the options are incorrect, A. Benefits are typically not terminated immediately upon returning to work on a limited basis. C. Benefits are not automatically resumed after disability recurrence, so the individual must file a new claim. D. Individuals could continue to receive benefits while gradually returning to work as long as they meet the policy's requirements. Question 20 on definition of total disability. Under most disability insurance policies in Maryland, what does a total disability typically mean? A. The insured cannot perform any job at all. B. The insured cannot perform the duties of their own occupation. C. The insured cannot work for at least 6 months. D. The insured has a permanent physical impairment. Answer: B. The insured cannot perform the duties of their own occupation. Explanation: a total disability is often defined as the inability to perform the duties of one's own occupation for which they were trained, educated, or employed. This definition may change over time, shifting to any occupation definition after a specified period, e.g. 24 months. While other options are incorrect, any job is often used later but does not reflect the initial own occupation definition. C. Duration of disability does not define a total disability. D. Permanent impairment does not always qualify as total disability. Question 22. Partial disability benefits. What is the primary purpose of partial disability benefits in Maryland disability policies? A. To provide full benefits for permanent disabilities. B. To encourage insured individuals to return to work part-time. C. To replace all lost wages for minor injuries. D. To cover the full cost of medical expenses. Answer: B. To encourage insured individuals to return to work part-time. Explanation: partial disability benefits are designed to help individuals who can return to work on a part-time basis. These benefits supplement the individual's reduced income and incentivize re-entry into the workforce without fully cutting off benefits. While the options are incorrect, A. Full benefits are not provided for partial disabilities. C. Partial benefits do not fully replace lost wages. D. Medical expenses are covered under health insurance, not disability insurance. Question 23. Presumptive disability clause. What is typically covered under the presumptive disability clause in Maryland disability insurance policies? A. Loss of sight, hearing, speech, or limbs. B. Temporary inability to perform any job duties. C. Chronic pain or discomfort. D. Partial disability resulting from minor injuries. Answer: A. Loss of sight, hearing, speech, or limbs. Explanation: the presumptive disability clause provides benefits automatically when a severe and permanent loss occurs, such as loss of sight, hearing, speech, or limbs. It assumes the insured is totally disabled without requiring proof of inability to work. While the options are incorrect, B. Temporary inability is not covered under presumptive disability. C. Chronic pain requires further evaluation and proof. D. Minor injuries leading to partial disability are not considered presumptive. Question 24. Benefit period for long-term disability insurance. What is the typical benefit period for long-term disability insurance policies in Maryland? A. 3 to 6 months. B. 1 to 2 years. C. 2 to 5 years or until retirement age. D. Lifetime benefits. Answer: C. 2 to 5 years or until retirement age. Explanation: long-term disability insurance often provides benefits for a specified period, e.g. 2 to 5 years or until the insured reaches retirement age, depending on the policy terms. While the options are incorrect, A. 3 to 6 months is typical for short-term disability policies. B. Long-term disability typically extends beyond 1 to 2 years. D. Lifetime benefits are rare and not common in modern policies. Question 25. Elimination period for long-term disability. If a long-term disability policy in Maryland has a 90-day elimination period, what does this mean? A. The insured receives benefits for 90 days. B. Benefits begin 90 days after the onset of disability. C. The insured must pay premiums for 90 days. D. The insured is only eligible for partial benefits. Answer: B. Benefits begin 90 days after the onset of disability. Explanation: the elimination period or waiting period refers to the time between the onset of disability and when benefits begin. A 90-day elimination period means benefits will not be paid until 90 days have passed. While the options are incorrect: A. The insured does not receive benefits for 90 days, it's the waiting period. C. Premium payment requirements are unrelated to the elimination period. D. Partial benefits are a separate concept from the elimination period. Question 26. Group disability plan taxation. How are group disability insurance benefits taxed in Maryland when the employer pays the premiums? A. Benefits are tax-free for the employee. B. Benefits are taxable as income for the employee. C. Benefits are partially taxed based on the claim duration. D. Benefits are only taxed if they exceed the employee's salary. Answer: B. Benefits are taxable as income for the employee. Explanation: when an employer pays for group disability insurance premiums, the benefits paid to the employer are considered taxable income. This aligns with IRS guidelines. While their options are incorrect: A. Benefits are only tax-free if the employee pays the premiums with after-tax dollars. C. Taxation is not linked to claim duration. D. Taxation does not depend on whether benefits exceed salary. Question 27. Cost of living adjustment COLA rider. What is the main purpose of a cost of living adjustment COLA rider in disability insurance? A. To increase benefits in line with inflation. B. To reduce premiums for younger policyholders. C. To provide immediate benefits after a disability occurs. D. To ensure lifetime coverage for disabilities. Answer: A. To increase benefits in line with inflation. Explanation: a COLA rider adjusts the disability benefits annually to keep up with inflation. This ensures that the purchasing power of benefits does not decrease over time. While our options are incorrect: B. COLA does not reduce premiums. C. It does not affect the waiting period for benefits. D. Lifetime coverage is not guaranteed by a COLA rider. Question 28. Residual disability benefits. What do residual disability benefits provide under Maryland policies? A. Benefits for individuals who are partially disabled and earning less income. B. Full benefits regardless of the insured's ability to work. C. Benefits for permanent disabilities only. D. Benefits for disabilities caused by pre-existing conditions. Answer: A. Benefits for individuals who are partially disabled and earning less income. Explanation: residual disability benefits provide partial payments when an individual is partially disabled and can work but earns less income than before the disability. While the options are incorrect: B. Residual benefits are not full benefits. C. These benefits are not limited to permanent disabilities. D. Pre-existing conditions may be excluded. Question 29. Maryland law on employer disability coverage. Are employers in Maryland required to provide disability insurance to employees? A. Yes, all employers must provide disability insurance. B. No, employers are not required to provide disability insurance. C. Only employers with over 50 employees must provide disability coverage. D. Employers are only required to provide short-term disability insurance. Answer: B. No, employers are not required to provide disability insurance. Explanation: in Maryland, employers are not legally required to provide disability insurance. However, many employers offer it as part of their employee benefits package. While their options are incorrect: A, C, and D, Maryland law does not mandate disability insurance for employers. Question 30. Non-cancelable disability policy. What is the key feature of a non-cancelable disability insurance policy in Maryland? A. The insurer can increase premiums at any time. B. The insurer cannot cancel the policy or increase premiums as long as the insured pays. C. The insurer can change the terms of coverage annually. D. The policy expires after 10 years. Answer: B. The insurer cannot cancel the policy or increase premiums as long as the insured pays. Explanation: a non-cancelable policy guarantees that the insurer cannot cancel the policy or increase premiums as long as the insured continues to pay premiums on time. This provides long-term stability for the insured. While our options are incorrect, A, premiums are fixed in non-cancelable policies. C, the terms of coverage cannot change annually. D, the policy does not expire arbitrarily after 10 years.